I'm Joshua Roberts of Biz News, and with me today is Marius Strydom, CEO of ALG. Today's topic of conversation is very topical and has been topical for a number of years now. The delisting trend, which has ravaged the JSE for almost 3 or 4 years now. We republished a superb piece of yours, Marius, earlier this week, which has gained a lot of traction amongst the business news community. What I liked about it is the different look at the reasons for the mass exodus of companies on the local bourse, the usuals being political instability, the rise of private equity and the like. But before we get into all of that, just give us a little bit about your background and the company you lead.
All right, my background is one of stockbroking. I've been an investment analyst for a number of years. Insurance was my speciality, so I used to cover the big insurance companies in South Africa with a number of local and international investment banks. Prior to that, I worked for insurance companies themselves. Over recent years, I shifted out of the stockbroking industry into consulting, and then we saw the trend or the writing on the wall in 2018, actually prior to 2018, when the European Union regulations changed with regards to research. It's called MiFID II, which was introduced at the beginning of 2018, which in essence means that a stockbroker cannot be paid for their research through trade anymore. In the past, you traded with the brokers who you liked most from a research perspective, and that's how they got paid for that research. But in the European Union now, you actually have to write a physical check for each report you receive, each phone call you receive, each meeting you receive from a broker. So you can't receive 10, 15 reports anymore and just pay the best guys. You decide the 5 you're willing to pay for. So we saw the writing on the wall, and we decided to introduce a different model into South Africa.
So let's just take a step back now and look at this delisting trend from a global perspective. The number of listed companies are declining all over the world. This isn't a trend unique to solely South Africa. What are the main reasons for this?
Look, I do think that the coverage is certainly an issue, especially for the mid and the small cap stocks. They are not seeing the benefits of being listed if they are not being talked about, if they don't have sufficient consensus numbers, if they don't appear on the radar screens of investors out there. And of course, I guess another trend is the increase in passive funds. So if you're not in the index, you're not held. And therefore, again, the smaller companies, they're dependent on active investing. And if there isn't proper research on them, the investor has to do a great deal of work themselves to better understand these small companies. And it's not clear that the benefit is there to do all of this work, to hold such small companies.
One of the main benefits about being listed is the capital that you raise either from your IPO or thereafter. Is the rise of private equity, venture capital for these private businesses in order to get financing that much easier, that being listed isn't that attractive anymore?
I certainly would agree with that as a reason for this trend as well. But it's a chicken and egg situation. It's not clear which one is the driving factor, whether the private equity firms are stepping up to the plate because the traditional investment banks are not doing the job that they used to do in the past, or whether it's the other way around. That the private equity players are pushing out the investments banks out of the smaller space.
South Africa completely missed the IPO boom that has recently taken place. As an example, 240 listings on the Australian exchange alone in 2021, hundreds more in the US. I stand to be corrected, but from my due diligence, not one new listing on the JSE in 2021. How concerning is this?
I think it is particularly concerning, and we have to ask ourselves whether we are in fact in the right kind of industries in this country, and whether the right kind of companies are growing and looking for capital. A great deal of the listings that we have seen is obviously in more new generation type of industries, tech and green energy, etc. And certainly there's the potential for South African companies, and there are many South African companies obviously in renewable energy, etc. And I think if some of them were to start coming to the market, they could find some resonance.
One of the key points you raise is the decline in foreign ownership in JSE-listed businesses. One of BizNews regular contributors, Magnus Haystack, an investment strategist at Brenthurst, has said on numerous occasions that this is one of the most important indicators to watch with regards to sentiment. When we as South Africa invest our money, there's emotion involved. We're matching our liabilities in rands. But the foreigners, there's no emotion, and they're investing purely on the fundamentals. Why is this foreign ownership such an important indicator to watch?
The most important reason is that we actually have a natural flaw to investing in the JSE from South African investors. We've got foreign exchange regulations. You can only take so much out. The rest must be invested here. We've got big investment by BEE parties, which provide support for the market. And then we've got the PIC that invests in a great number of South African companies. So there's a natural flaw below which the shareholding can't really fall. But what that does is it makes the offshore investment so much more important. They really are, most of the time, the marginal buyers who push demand for South African companies up or down. So if they have more demand for our companies, the JSE's rating increases. But if they are selling out of the JSE, then the rating decreases. This supply and demand dynamic is sometimes as important as the underlying results of these companies. If you look at the PE of the JSE All Share Index at the moment, which is 40% below the FTSE 100, which is depressed in its own right, and less than half, well below half what the S&P 500 is. And that's not all just due to higher growth expectations. A lot of that is due to simply the demand dynamic not being conducive for the JSE.
We've seen a decline in foreign ownership, but ironically, we've seen a lot of buyouts by foreign players into JSE-listed businesses. DP World's buyout of Imperial comes to mind. Is this indicative, what you've been saying now, that these companies are trading at such cheap multiples that these foreign businesses come in and swoop them up at ridiculously cheap prices?
Exactly, and it speaks to the point. Trade buys are happening because there's value to be had, but the portfolio flows are not happening because these portfolio managers, they're spoiled for choice. They can send their money anywhere in the world and many emerging markets, and if the South African companies don't pop up front and center for them, they're not going to go look for the South African gems. These gems have to be often thrust in front of them.
Analyst coverage was another key point that you raised. Why is sell side, this analyst coverage, so important that has decreased by 30% over the last 3 years, as your piece outlined?
It's important, certainly for South African investors, but less so. Because the South African investors, it's a small market, small community. We know the companies on the JSE. We've got direct relationships with those companies. So we get to understand what's going on with the companies, we can comfortably invest in them and be kept up to date. But the emerging market fund managers, the offshore shareholders, they have, say, a typical EM fund manager as maybe over 1,000 stocks in their universe. But they will only hold 50 or fewer stocks in their fund. So you've got to get from 1,000 down to that 50. And many South African companies are just simply one of 1,000. You need brokers, and traditionally and historically, brokers would be promoting their research on the JSE companies to these emerging market fund managers. I mean, that's how brokers make their money, right? They write good research, and the EM fund managers trade through them. I used to work for an international bank, and we spent as much time on the phone to the emerging market fund managers as we did to the local fund managers. And we spent 2-3 weeks a year abroad pounding the pavement, going to speak to these EM fund managers and telling them the South African stories. And often it was on your second or your third roadshow that the fund manager actually took interest and started doing some work. It takes groundwork to create visibility. And if the brokers are not doing that groundwork for you as a listed company, you have to do it yourself. And that is not that easy. A lot of investment has occurred in investor relations businesses by large South African companies. But it does not carry as much weight as having a good amount of analysts covering you and contributing to your consensus numbers, which is often a screening tool that these emerging market fund managers look at first.
Lastly, I spoke to fund manager Piet Viljoen yesterday. He's listed businesses himself. We were briefly talking on this topic. He says there's no ways he would do it again. It just makes no sense if you're a small to mid-cap business, as you've been saying. Marius, you lay free for a second. How do we turn this trend around?
You find different ways of promoting research in your stocks. Many bourses internationally, the Deutsche Bourse is a good example. They actually partner with research providers to provide coverage on undercovered segments of the market. That certainly is one way of doing it. And the JSE will well look at options like that. You then also, in my opinion, need to find a way of getting the more interesting, exciting companies onto your platform. But you have to offer them more than simply a place to trade the shares. These companies must find an improved access to capital and improved visibility through the listing. And I think we've got many alternative bourses now as well in South Africa, and I think there is going to be a push for these, whether it's A2X or AltX or some of the others, to help companies increase their visibility, which will then help them to access capital.